Welcome back to GoldSeek TV. I'm here in Zurich at the Precious Metal Summit with Ronnie Stoeferle, managing partner of Incrementum Funds and In Gold We Trust. Ronnie, it's great to see you again.
Good to see you, Peter.
A year ago, we were at this conference. Gold had taken a hit because of the US elections. It fell a few $100s an ounce, and you said, don't worry, give it several weeks and we'll be back in bull market mode. And gold did run from $2,500 an ounce to almost $4,500 an ounce. Quite a run. Has the gold price peaked this year? Are we at the end of this run? How do you see things this year, a year later?
Well, I think we're definitely not, we haven't peaked yet. I think it's a correction. It's a healthy correction. I mean, we shouldn't forget, just in October, the price of gold was up 400 US dollars. I remember waking up in October, you look at the gold price and it's up 2% and 2% the next day, 3%. We just got used to that. And there was, I think, quite a lot of momentum chasers and FOMO and, lots of really kind of people that just wanted to see this momentum trade happening. And I think they are now cleared out since the correction on October 21st. To be honest, I would think that for the next couple of weeks, so the rest of 2025, we won't see new all-time highs. I think on the lower end, like 38.50, something like that. That would be roughly like a 50% retracement from the move up. That's what I would like to say. Our signal moved to neutral on October 10th. So we've raised quite a lot of cash for our funds, and I feel pretty confident about that. But definitely it's a healthy correction, it's a pullback, but it's not the end of this bull market.
Yeah, it was quite an aggressive move, which is, I mean, for a gold bug like myself, I get kind of scared seeing that kind of a price appreciation, but it's a healthy maybe consolidation now to get rid of some of the excess. Are the fundamental drivers then still in place for this bull market? Are you seeing different kind of buyers emerge and different interests from different buyers, or what are you noticing?
I would say, to be honest, the fundamental trend is, or the fundamental drivers are still basically the same. Yeah, it's an enormous amount of central bank buying. It's an enormous amount of interest coming from emerging markets. Last year we've been really vocal saying this bull market is not being driven by Western markets, but rather by emerging markets. So if you really follow the money, follow the flows, the center of the gold world is already in emerging markets and not here in Zurich or in London or in New York anymore. And then secondly, I think, those geopolitical drivers, if you have a look at, the deal between China and the US, and if you look at the statement coming out of the White House, and then if you compare it to the statement by China, I mean, that's pretty different language. Yeah. So I think Donald Trump was basically buying time. I wouldn't get too excited about that, to be honest. And then all the long-term drivers, like, the debt situation, obviously, the fundamental flaws that we have in our monetary system, they're obviously still in place. So, again, I would say, there were some short-term triggers, for example, some sort of hawkishness, the price, the rate cut for December basically being priced out. Then we saw some strength in the US dollar recently. But I think that's just a normal and a healthy correction. It's just like if you're running up a hill at a really fast pace, yeah, at some point you have to rest and take a deep breath.
Yes, and so in the next year, too, you still see the price moving higher into hitting new record highs, new levels?
I think so. We're on record with our long-term price forecast of 4,800. This is the base case, and then we've got the 8,900, which is the inflationary scenario. And to be honest, nobody's talking about inflation these days in the, let's say, in the I don't want to say normal world, but like in the mainstream financial markets world. And I really see a comeback of inflation happening. This is what we're seeing in many of the indicators that we're following. I'm pretty excited about the outlook for oil, for example. So I would say that our inflationary scenario, 8,900 by the end of this decade, still sounds pretty realistic to me. Now, 8,900 even sounds super optimistic for people in the gold industry. But then on the other hand, that's a 16% CAGR from now until end of 2030. That's not impossible. I mean, what's the performance of gold this year? 57% year to date. So I would say 8,900 is possible. And as always, this bull market will end in a crazy mania. And I think we've seen already, we got a feeling for that in October. It's felt a little bit like a mania. But the good thing, Peter, is that during that drop that happened, and it was like a 10-11% correction, I've never seen sentiment cooling off that quickly. We went from super excited, super optimistic to extremely negative, extremely pessimistic within a very, very short time frame. And that's usually a really good sign that we're not at the end of this bull market.
What do you think about the silver market and the silver price?
Well, I mean, we had like the big long as the leitmotif of this year's In Gold We Trust report, and we said now is the time to be overweight performance gold. Now, performance gold, that's mining stocks, that's silver, and that's obviously also silver mining stocks. Yeah, and I would say like, now silver is trading above 50 again. If you have a look at the very long-term chart, as the old saying goes from technical analysis, there are no triple tops in markets. So we just went above that. And, we're now entering uncharted territory. Yeah. So we all know, the fundamental demand coming from the solar industry. We know that silver was just announced being a critical metal by the US. But we also know that the investment demand is still fairly small. And I think we really need investment demand really picking up. Then I think we can easily go to triple digits over the next couple of years. And I mean, let's not forget, exactly 1 year ago, gold was trading at 2,700, silver was trading at $32. So, it can happen, but I think the risk reward for silver is definitely even better than for gold.
Now, you're at this conference meeting with a lot of different companies, exploration, mining, gold and silver mining companies. What are you seeing right now? There's still opportunities left at these gold prices? Have they caught up to the gold price?
No, not at all. I think, the major companies are still having very conservative assumptions in their decks. So they're seeing like a long-term gold price of 2,500, 2,700, something like that. They haven't upgraded to recent levels. And then when I talk to the junior mining companies, they're not extremely pessimistic, but I don't see that there's like a mania in the junior space. I think also with the M&A that we saw recently, it was mostly like in the mid-tier space. We haven't seen any majors merging or doing takeover offers. I mean, there's some rumors regarding Newmont and Barrick, obviously. But I think so far, the money will trickle down to the juniors, but we haven't really seen that yet. And it seems that the large cap producers, they're still pretty conservative. They repaired their balance sheets over the last couple of years. They're focusing on shareholder value, increasing dividends and stuff like that. But I think at some point it will go crazy again, and they will start paying like huge premiums for takeover offers. But we're not there yet. So I would say like we have at least 2 or 3 good more years ahead.
Fantastic. So a lot of opportunities in the sector remain. The gold and silver prices have run, but the gold and silver stocks haven't really appreciated as quickly as they should have under this environment. I've noticed like with Equinox Gold, their earnings, they're still last quarter, they had under $3,400 an ounce realized gold price. So even the miners haven't released numbers with the latest gold price, and the margins are huge. I mean, a lot of these miners are making $2,000+ an ounce. That seems quite unheard of.
It is, yeah. I think, since I'm in this market for roughly 20 years, I've never seen the producers in a better and healthier position. It doesn't mean that they won't screw it up at some point in this cycle. But I think now is really kind of the sweet spot in the mining space. And all the people that that I meet, like generalist investors, they keep telling me, I missed it. It's already too late. And I said, no. I mean, of course, we've seen a move. Yeah, mining stocks are up like 160% over the last couple of quarters, but given the appreciation of the gold and silver price, I think that's still not enough. And actually, mining stocks were down like last year, while gold was up big time. Yeah, so it's now only starting. So therefore, I'm pretty excited about the outlook for the gold mining industry now.
Excellent. Well, Ronnie, we always love to get updates from you. How do we keep in touch, and how do viewers follow you?
Well, we're In Gold We Trust is obviously our publication that we put out for 20 years now. In goldwetrust.report, you can download the reports or previous reports in English, in German, in Japanese, in Spanish, in Mandarin, not in Czech yet. Yeah, we're working on that. But that's the work that we do at In Gold We Trust. And then for Incrementum, just have a look at incrementum.li. And then I'm also pretty active on Twitter, like you are. So my handle is @Ron Stoeferle.
Okay, great. Well, we'll add that to the video here and look forward to following up next year. Ronnie, thank you for your time.
Thanks, Peter.
Cheers.
Pleasure. Thanks.
Thanks.